So the upcoming Federal Reserve meeting is of paramount importance, not just to the stock market, but also to the cryptocurrency market as well. Now, the two major questions that everyone is waiting to be answered are, will the Federal Reserve raise interest rates? And if so, by how much? So the second question is, how high will the interest rates go? So to get an accurate assessment of the situation, we must first take into account the most up-to-date information available. So on March 22nd, the Federal Reserve will either raise interest rates by 0.5% or 0.25% or not raise them at all. So market expectations are that there is a 0% chance that the Fed's going to raise interest rates by 0.5%. The market predicts that it is off the table whatsoever. When Jerome Powell testified before Congress just a few days ago, there was an 80% chance that the Fed was going to raise it by 50 basis points, but it has now fallen down to 0. Now, the probability that the Fed is not going to raise interest rates is 25% chance, but there is a 75% chance that the Fed will raise interest rates by 0.25%. Here's what happened. Now, the January inflation report showed very little progress in the fight against inflation. Now, inflation went down from 6.5% in December to 6.4% in January. Now, Powell testified to Congress that they were having a hard time bringing down that inflation. And this caused the banks to start collapsing. So inflation appeared to have hit a wall, and the banking sector was not ready for that whatsoever. So the probability of a 0.5% increase shot up to 80% at that time. So since then, variables have changed. Now the probability has changed dramatically. Now the banks are having trouble in this higher interest rate environment, and the cracks are now showing. Now the market, it's concerned that these higher interest rates will cause even more problems from the banking sector. Now the Federal Reserve, they're taking this into consideration. Now, the second thing that happened was that the February inflation report turned out much better than we first thought. So inflation fell from 6.4 in January to 6.0% in February. This inflation falling is at a much better pace, but the February inflation report sealed the deal because inflation was coming down at a better pace. So a raise of 0.5% is now just off the table, and there's a 25% chance that the Fed, like I said, is not going to raise interest rates at all on March 22nd. Some believe that something's already broke. The banks are now collapsing. Any further interest rate increases could collapse the system. So we need to stop here, is what a lot of people are saying. Now, the Fed wants to stop here, but according to this theory, I disagree, because the banks that went under were not the bigger banks. Back in the Great Recession, the big banks were the ones that were at risk, but not now. JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, US Bank Corp. Those are the biggest banks. Silicon Valley Bank, the second largest bank failure in history, it's not even close to the level of those banks. Silicon Valley Bank has under $200 billion when they went under. Elon Musk has more money than that. Now, the U.S. Treasury, the FDIC, and the Federal Reserve, they intervened to stop the panic and the bank runs. Things are not collapsing, and the Federal Reserve is not in jeopardy of collapsing the entire financial system if they raise interest rates by another 0.25% on March 22nd, or even by 0.5%. Now, ultimately, the bottom line is, with inflation at 6%, the Fed cannot stop of raising the interest rates right now. It would be premature. There'd be a risk of inflation making a comeback. So if inflation picked back up, there would be a loss in